although I sometimes feel like a broker, I don't think I will fit the definition of my colleagues over here. I'm working for SunGard. SunGard is the largest privately held business solutions and software company in the world. We have around 20,000 employees, 25,000 customers, and we service them in about 70 different countries. I'm working within the capital markets and investment banking unit of SunGard, and we more or less provide solutions from connectivity to settlement.
Great, thanks. So let's start the acrimony really quickly. Asa, you're a regional broker. Why should we be working with you when we can just give the order flow to Matt, who said he's a really global player and he can execute everything. So what do you see your role is, and how do you see the role of the value of the local broker versus the big behemoth?
I think that a regional broker will need to provide a full service to their domestic clients, or what is defined as their domestic market. And you can no longer provide only a very small range of services, partially because some of these clients won't fit into the client model of the very large brokers like Crédit Suisse or the other international brokers, and they will simply not be eligible as clients for them, but they will be for us because we provide them with a wide range of services. I think also that, so to some extent, it's a full service to domestic clients and specialized services to global clients. And that has to do with focusing on what you're really good at, and that is understanding your home market, the products that are within your specialty, the markets that you're closest to, which it would include in our case would be Nordic markets. In terms of execution, we're talking about liquidity in the Nordic markets. We have the highest market share of any broker in the combined Nordic markets, and will therefore be able to provide liquidity on a scale which is unprecedented even amongst the international brokers. Yeah.
Okay, sorry about that.
I think that also goes for when you move into the small and mid-cap space, for example, where smaller or regional brokers will provide maybe a more intense service or have a much longer list of companies that they cover compared to, for example, the global brokers. Those are a few examples of what a regional or a domestic broker can provide even to global and very advanced clients.
Now, Matt, how do you see this kind of shaping up? Do you see kind of a role for the regional player? And I know you work with some regional players, or should all the flow come to you?
Yes, we do. I think the short answer is whoever your broker is, wherever they're trading on your behalf, that broker needs to be adding value to the trading process. If that's through a specialized research product, so be it. If that's through providing liquidity that another broker can't provide, then so be it. But you've got to be seen to be adding value. One of the things that the MiFID process brought in was supposed to be about competition and actually kind of leveling the playing field, and actually what it did was played into the hands of the guys with the money, because through competition of the marketplace, through fragmentation, etc., it meant that the build and the spend that went on IT resources and technology just skyrocketed. So, there was a function of scale there that the big guys had that some of the smaller guys didn't. And in that respect, it didn't necessarily achieve what it set out to do. But I think, what we see now is that, volume isn't necessarily as fluid, if you like, as it was a couple of years ago. And I certainly see a lot of clients that are looking to consolidate their broker lists. Again, that theoretically plays very much into the hands of the guys that can provide global access, can provide the full service suite. But I don't necessarily think it needs to marginalize the regional brokers completely. But I do think that those regional brokers need to be able to prove that they add value to the brokerage process.
Yeah, Michael, how do you see kind of the regional firms adding value and really differentiating themselves and getting on some of the broker lists that Matt kind of said that are trying to get pared back?
Well, the brokers I have been talking to try not to be too much alike. They try to differentiate themselves from the others. And I think the ones I spoke try to find that in offering business intelligence. So being able to really make use of the fact that they know the local market, they know the local players, they can oversee the full chain of what they offer to their clients. So they are really keen on trying to offer this business intelligence. And there are also some who really try to keep their customers or their flow loyal to them by making sure that they offer these clients the highest value. I think one of the examples in the Netherlands is a relatively small bank who used to be a market maker firm, then changed itself into a floor broker, and then went on to become a retail broker. And in their mission statement they say, we want to offer our clients with the same tools as the professional investors. And we want to achieve the highest customer satisfaction by giving them the lowest price possible. And they gained a lot of flow in the Netherlands, which is my home base. And I think they control at this moment 50% of the flow. And now they are looking, of course, at things to make sure that they keep the flow by partnering with some liquidity providers and making sure that they more or less internalize their flow.
So basically, creating critical mass and then leveraging it, basically.
Yep.
And keeping it there.
If you have this critical mass of flow, it's hard to break in on that critical mass.
Bradley, how do you see the regional firms kind of offering unique value?
Well, in the end, it still is a people business, and it's being a local broker, a regional broker. You do have that understanding, the local culture, those relationships to bring to the table. But in the end, the thing that's going to be most important is you have to, have a differentiator and a value offering that is perceived by the clients to be something that's worth more than going with a global player, because at the end, and whether that's market share or whether it's technology, and Knight in the US, it started out as a US only firm, and built up its market share, and today is becoming a global player. But there's definitely, we still see ourselves in the US as a regional player, as one with market knowledge, with value to give to our clients because of the not only the market knowledge, but the spend in technology and investment in advancing the algorithmic product and smart order routing. And I was to Matthew's point earlier. I think he's absolutely right. With MiFID in Europe, it was brought in with the view of promoting competition, and I think the burden of MiFID for a lot of regional brokers has been too much, and obviously some have risen to the challenge and have advanced and have really flourished in the new environment, but a lot of the smaller firms just don't have the deep pockets to invest in smart order routing and all the required technology today, and not just invest in smart order routing, but do it in a way that they can beat out the competitors on a global level.
I'd like to dive a little deeper into this, that issue, Matt, and probably with Matt and Asa. How do you create a partnership? So let's start with Matt. So here you are, a global firm, great infrastructure and technology, you can pretty much get anywhere. And here Asa is a very definitive understanding and knowledge of the clients and the market structures. How do you work a smooth partnership so that SEB doesn't feel threatened and that you can really play a valuable role to her without disintermediating our clients?
Sure. Well, I mean, it's an interesting dynamic because naturally, we can see ourselves as competitors, and there are ways that we can work together to kind of create a greater product for us both. One point I mentioned earlier, and I think I'll come back to this, is liquidity for starters. There are naturally some clients that we may not tap into, that Asa's team will. And in that respect, that there's liquidity that SEB might have, for example, that we don't. Likewise, as I mentioned, Crossfinder as a crossing engine has become a a huge animal in itself, and we have significant liquidity in all the markets we trade in Western Europe, for example, there. So there are certain arrangements there that I'm sure that we would like to further in terms of understanding each other's and being able to take advantage of each other's liquidity. I also think that, again, coming back to the point about broker lists, there are a lot of clients these days that want a full suite of products available to them from all the brokers they have on their list. And that often includes algorithmic tools, for example. Now, not all of the regional brokers, again, have the ability to invest in those products and build out the algorithmic suites that they might want to be able to offer that the likes of Credit Suisse can. So in certain circumstances, there are ways that you can work together with a local player to create a product that works for both of them. And I think we see more and more requests from regional brokers looking to leverage our technology, but allowing them to keep hold of their client base. So I think there's an important relationship there as well.
Awesome. You feel comfortable with that relationship, and how do you kind of maintain, is this kind of a service, research kind of based, high touch kind of feel, maneuvering that you feel comfortable with working with a global player like that?
I think that we feel very comfortable in our relationships with those suppliers that we use that provide us with, for example, technology. Some will provide us with the ability to, let's say, cross our flow in a way that allows us to tier our flow and to preference our own flow, creating like a pool within a pool. That will allow me to effectively offer my clients a dark pool without taking the regulatory risk of actually creating one, starting one up, having to deal with the transaction reporting, and then find out 2 years down the line that this is actually not going to be allowed any further. The investment that I have to do is considerably, relatively larger for me than it is, for example, for someone like Crédit Suisse. I think in terms of any partnership, I think it's important to remember that in those circumstances, we would be a client, the global broker would be a provider. They are interested in leveraging their technology investment that has become very, very expensive, in particular now as volumes are down. So it's important for them to retain flow or to attract flow. It also allows for very, very interesting pricing schedules and price models, which can be very beneficial for those who are large liquidity providers regionally. Those are examples of where you can cooperate, or where you can get a win-win situation out of a regional broker and a global broker. I think that competition, when it comes to the very large international clients, you're going to have to live with. You can't. I think it's unrealistic to believe that you can create some kind of exclusivity agreements, even if you are cooperating with a global house in your home market. I think you need to be confident enough, and your products need to be good enough for you to actually enter into those agreements. Otherwise, you really don't have anything to compete with, and hence you should justifiably be out-competed by your global competitor.
Now Matt and Mike, how do you guys look at this as well? Because I guess you're kind of in the same dance as, Michael, you've got a series of software assets and brokerage services that you kind of offer to clients to kind of leverage scale of SunGard. Now, how do you see this balance playing out between the larger players and the more regional folks?
Well, personally, I do not really believe in partnership of partners with the same business model. To me, it sounds a little bit like calling a takeover a merger. There's always one dominating the other over time. Again, I think you should use your own strength, and you have alternatives for tapping into other liquidity. And then I can mention that SunGard, we could call it carrier neutral, is not into this broker business, but still can offer solutions to tap into broader liquidity at other markets.
Bradley, in some ways you're a regional firm, in some ways you're a lot bigger than a regional firm. How do you kind of balance some of these partnerships out?
Well, yeah, I mean, it is, as you say, a balance. You know, there is relationships change over time. There may be relationships that you enter into with regional brokers that morph over time as the various companies change and as their strategies change, and everyone has to go into these kinds of relationships with their eyes wide open and with clearly set objectives and rules of engagement. We've enjoyed some long and very profitable, mutually profitable relationships with the regional brokers in areas where we were weak. We feel that, yeah, exactly, mutually beneficial. And Knight has transitioned over the last few years into a global broker. We have offices across Asia, across Europe, and of course in the US and the Americas. But there is value, and there is value from regional brokers for a firm like Knight's, and in return, the regional brokers see value in technology that Knight has, or the access that Knight can give in markets where Knight is stronger.
Okay, we've got only about 5 or 7 minutes left, and I think one of the big things that I start this with Asa is we're seeing new MiFID proposals, and certainly regulation is a huge specter on the horizon. Not necessarily sure how it's all going to play out. How do you balance this whole regional versus global issue around regulation, and will you lean on partners to try to help you, and how will that all play out, or do you think you'll kind of take all that on yourself, and how do you think this whole regulatory infrastructure will play out at SEB?
And I think that you have to evaluate the cost versus the benefit, like you do with many other things. But I think the regulatory cost burden is another investment which needs to be weighed up carefully when you consider whether you do things yourself or whether you outsource, and what are your core products, what are your core markets, where will you actually add value relative to your clients. And I think in local markets where we have significant strength, where we are very familiar with the local authorities, for example, we will undoubtedly be able to add significant value, also in the regulatory space, because even European regulation is being interpreted locally. Similarly, to give you an example, we have just opened an office in Hong Kong. We'll start trading equities in the Asian markets on behalf of our domestic clients primarily, and for some hedging purposes. Still, we are not at this stage starting an office and becoming direct members in all of these exchanges on day one. That does not make sense for us. We will use third-party brokers in this particular context, but we're also not expecting to deal Asian equities for Asian clients at this particular moment in time. So I think it's the regulatory burden is significant, and it will become a barrier of entry for many smaller brokers, and you have to have a certain size. Even as a regional broker, you have to have a certain size to be able to carry that burden. But at the same time, it is no different than any other investment you make, as in technology or local brokerage knowledge or market knowledge, in order to start a business. You make those evaluations in terms of whether it makes sense to do it yourself or whether you use someone else.
Matt, how do you kind of see this, MiFID playing out in the implementation, and where this balance between local and global will play out?
Well, I mean, how long we got? Anytime you mention MiFID, we could sit here for hours and hours and debate what's going to happen when actually we don't yet know. So, for starters, there are a lot of unknowns at the moment, which mean that it's very difficult for any broker to build a strategy around something that may or may not happen. So everybody's in the same scenario in that respect right now. I do think, just to pick up on one point that also made there, was that that there are different interpretations of regulation within local marketplaces. One of the things that MiFID II is obviously bringing in, and the changes that are going through at a European level right now, is the concept of ESMA being one central regulator. So there is every chance, if they follow through what they've said that they're going to do, that the regulatory landscape becomes far more even. Right now, if you look at Spain as an example, the rules that apply to most European countries simply have not been introduced to the Spanish market in the same way. It's a completely different model right now. So it'll be very interesting to see what happens with a one central regulator. I do think as a general rule, though, that with what I've seen coming through from MiFID II and the EMIR directive and the Markets Abuse Directive, there's going to be more and more emphasis placed on any broker to police the flow that they have, to invest in the technology to ensure that they're doing the things that they say they do, to complying with their best execution policies, to going to the necessary venues they want to. And again, within the OTC derivatives markets, we're seeing more and more emphasis on that market being ultimately moved to an electronic traded model. And that, again, is going to require technological spend. So I do think that there's going to be a need for more continued investment from all brokers. And, I think that some will struggle with that, especially within the flows that we're seeing right now. And I think people are going to have to understand that investment is going to be a necessary part of what we all do in the future. So, Bradley mentioned big pockets, and it's a reality right now. And again, that perhaps comes back to the local versus regional dynamic where, perhaps the local guys need to leverage of what the big guys are already doing. That may not create a more competitive environment in some respects, but it may keep some regional firms in business in another.
Bradley, looking like you want to chime in here.
Yeah, I just wanted to say that, to point out that all the largest houses in our industry all started out as regional brokers themselves. Whether it's in Switzerland or the US or the UK, and through their skill and their ingenuity and drive and perseverance, they've created these fantastic global companies. It would just be. I would like to see that continuing. That's so regional brokers like SEB or any other there aren't too many obstacles in their quest to actually to drive and expand and forge forward. And it's already such a Darwinian and difficult trading environment out there without the regulator actually making it extremely difficult and actually holding back. I don't think anybody wants to see regional players all disappear as a breed. There's definitely a bit of actually partnering with the global player to get the things that you don't have. But there's also, I think the regulator has to take some responsibility for not crushing out the regional player from the game at this stage.
Sounds good. Michael, you want to have a last word, and we'll open up to maybe one question, and then we'll apologize for all the noise and the difficulty in hearing everything.
Yeah. Well, like the people before me said, the bar is raised, and in MiFID the sequel, there is a better economic situation. There's much more fragmentation. Technology changed considerably, so yes, it will be quite a challenge. But of course, coming from that angle, but I think the solution will also come out of technology.
I think we have time for maybe one question. Any questions? Yes? No? Well, with that, I think I want to apologize for all the noise sitting here, and want to thank everybody for sitting in. I want to thank our great panel, Bradley Duke from Knight, Asa Palm from SEB, Matt Cousens from Credit Suisse, and Michael Sitz from SunGard. And I'll bring it back to Mike Powell.